Hello everyone, this is Samir again. I'm 28 years old and I live in London. And this YouTube channel is about personal development, uh, forex trading, and social skills. So today I'm here sharing my basically trading plan and what do I look in a good setup. Before I dive into too many details about my trading and a specific trade I took, which made me five times my investment, I'd like to really recommend a book, trading book, and this is called "Trade Your Way to Financial Freedom" by Van K. Thorpe. Like, I wouldn't recommend any trading book more. Actually, this and another trading book, but that's for another video. But this trading book really drills down to the fact that if you want to become a successful trader, you gotta really just take the setups that you have in your plan and not anything else. And going into my third year of trading, I've been a trader for 2 years. This is something that I really now live by, and I've seen successful traders as well live by this motto of just being very selective with their trading approach. So just to dive on in my trading, I just trade euro US dollar, which is a currency, one of the most traded currency pair. And I trade the concept which is called smart money concept, and this is something that has been really popular in the retail trading community. And I've been trading the concept for more than a year now, and I'd say that I've been profitable over that period, but it's not been an easy ride. And slowly I'm getting where I want to, but I'm not the best trader that I could be. So this sort of YouTube video is sort of a testament of a journey to where I want to be with my trading. So anyways, without further ado, my trading plan, it is quite simple, and trading plans should be very simple. One of the key things that I look at in a trading plan is the structure. And here with euro US dollar, you know that the market has been very bearish, pretty much since that hit the top in January last year. Since then, price has been printing lower lows, lower highs, lower lows, lower highs. So basically, we know that it's a bearish market. But then how long will the bearish trend continue? And that's why I asked this question to myself: where can we see, pullbacks, or where can we see bullish momentum come in? And one area that was in my mind was this low, which is probably the lowest euro US dollar has been in the last 15 years or so. And I marked it as a demand area, and that's basically a smart money concept. You look at potential extreme areas as demand and supply, and look how beautifully this area demand reacted from here. And once I go into a 4 hour time frame, what I deduced from this sort of reversal was that okay, there are buy orders in this area, which mean enough buy orders to sort of uh, nullify this supply. So there was a 4 hour supply, I'd say, here. And sorry, not 5 minutes, 4 hours supply, and it basically nullified it. So that meant that this is a strong area. If the price comes back again, I can potentially see buying opportunities. So again, if I look at my trading plan right here, which I don't think if you can see that very clearly, but the first line is pro 4 hour and 15 minutes. So what do I mean by that? So on 4 hour time frame, I know that we're bullish once this area got broken, and this is a strong low. So as long as this is not broken, I think we're still bullish on 4 hour. Yes, a lot of trading experts would say, okay, this is structure as well, and once you go bearish, then we are bearish for good. I wouldn't say so. I mean, yes, on 4 hour intraday we might be bearish, but if we also look at daily, let's say, and if you consider this daily structure, this is bullish. So I'd say 4 hour is bullish, and then once make that make that assumption, I look at the 4 hour order block, and the 4 hour order block is getting decent reactions. We're getting buy orders coming, right? Buy orders come in here, which breaks this structure, um, and then there's a momentum building up for buys here. I was away from my desk, but I would have taken this trade, let's say, long from somewhere here and protecting my low here. And my usually trades are 5 hour, so I just close it here. 5 hour, yeah, almost here. This would have been a potentially good trade, but I wasn't on my trading desk, and it happened in the evening, so might not have had it. But anyways, so the high probability trade I took was this one. Why was it high probability? Because price came into that demand area, shuffled. This is sort of a Wyckoff theory, you can say. Um, Created liquidity. So these are equal, sort of equal points, and I call them liquidity points. Created liquidity, smashed that liquidity. One of the points is and broke the 15-minute structure. Why do I call this structure? I mean, this movement was almost a 30 pip movement. So this is structure. Once this gets broken, I'm like, okay, we are seeing bullish momentum. And, as expected with higher time frame, because we've looked at higher time frame, we can see price continue higher up. So we say 15-minute bars, like go to the top, and that's it. And the other point is valid 15-minute POI means point of interest that takes previous liquidity and breaks structure. Ding. This is what exactly it does, right? This fat ass POI, sorry for my language, uh, brings in, takes previous liquidity, takes liquidity and goes and breaks structure. What happens next? Price comes into the POI. Look at, we go to closer time frames. You know, breaks this structure, which is basically other component of my plan. 3 to 8 pip stops, 5 hour target, clears chalk. Chalk means change of character. Other people call it momentum swing as well. And I can deduce that this is a change of character because it's a supply chalk above, and this is a chalk below. Chalk below. And you basically cover your extremes and you can take hit from here 5 minutes. What I did was I traded from this level and I covered my this extremes. And yes, uh, it was a wide ad stop at 13.7, but I took it till here, which was a good area. There's a supply. Asia, I would have gone, could have done this, but I was okay with 5 hour. And this is a simple trade. This is a golden setup for me, and it ticked all my boxes. Pro 4 hour, 15 minute. The POI took previous liquidity and broke structure. There was a change of character. Price came back into that area. And there was another point here that I missed. I mean, it doesn't have to, but there's liquidity being taken here as well, liquidity below. So a lot of affirmations, a lot of confirmations of my trading plan, and I was a happy trade taking it. Boom, boom. And management, it's just 5 hour or nothing. So that's where I won. Like I put in like 20 pounds, I got 100 pounds back. And this is how, like, pro traders trade. Like, they wouldn't be looking at things like, let's say, supply is here, let's trade this 15-minute supply. I mean, maybe, but firstly, you're not in the, if you look at 4 hour structure, where is it? You're not in the discount premium of the price anyway, so it's a low probability for me. And it's just a poor setup. Like, what has it done? Yes, it has taken this low, but has it reacted? Has the price changed character? Not really. So, anyways, the moral of the story is to trade your plan, be positive, and always, always, always have a neutral perspective about market. It's not as easy as it make it sound. At the same time, consistency is key. I've been doing it for 2 years. I'll probably be continuing it for the rest of my life and implementing changes, changes, changes. And that's how trading works. So thanks, and don't forget to like and subscribe. Take care. Bye.